Welcome to the Deep Dive.
Hello.
This is where we take those burning questions you send us, those topics you're curious about, and we really dig in.
Yeah, we try to pull out the core stuff you need to know quickly, without drowning you in information.
Exactly. So today we've got a really interesting one. We're diving into how the ultra-wealthy invest their money.
Mm-hmm. And we're using a specific source for this. The book, The Billionaire Secret by Herbert Tabin. It was apparently inspired by this billionaire figure, Marvin.
Right. And this is perfect for you, our listener, the learner archetype, someone who wants to really get it thoroughly but efficiently.
Consider this your shortcut, maybe, to understanding a financial approach that could be, well, pretty different.
Okay, so the big question we're tackling, pulled from the book, is what's the secret?
Yeah, how do the rich keep getting richer? Is there some, underlying strategy?
And crucially, is it something anyone can understand, maybe even apply, without needing, incredible luck or connections or fancy algorithms?
That's the hook. And the answer, according to Tabin's book, revolves around something maybe not everyone thinks about much.
Preferred securities.
Preferred securities, exactly. Often overlooked in, the usual financial news chatter.
But the book argues they're key, a cornerstone even. Okay, let's unpack that, because right off the bat, this feels, well, it goes against the grain a bit, doesn't it?
It really does. I mean, think about most investment advice you hear. It's often about
Beating the market.
right, chasing trends, timing things perfectly, finding the next big thing.
IPOs, day trading.
Crypto spikes, hedge funds, all that high risk, potentially high reward stuff, the exciting stuff.
You said that makes headlines. But the Billionaire Secret basically says, hang on, the people who already have serious wealth, they might be doing something quieter.
Much quieter, less flashy. Which brings us to the author, Herbert Tabin.
He wasn't some outsider. He's an investment banker, right?
Yeah.
Deep in the industry for years.
Yeah, he knew the landscape. But then he meets Marvin. And Marvin, well, he wasn't your typical image of a billionaire.
No flashy cars or anything.
The book portrays him as more wise, calm, and his investment strategy was surprisingly straightforward, focused on these preferred securities.
And Marvin's wisdom, his approach, that's what Tabin wrote about.
That's the core of the book, Marvin's principles.
Okay, so let's get into it. Preferred securities. For anyone listening who's maybe thinking, what exactly are those?
Good question. Think of them as sort of a hybrid. They've got features of stocks, features of bonds, but they're their own thing.
Okay.
A really key characteristic, they usually pay fixed dividends.
Fixed dividends, so predictable income.
Exactly. Predictable, consistent, unlike common stock dividends, which can, go up or down depending on how the company's doing or what the board decides. Preferred dividends are typically set right when they're issued.
That predictability sounds appealing, especially, in uncertain times. And there's another thing about those dividends, isn't there? A priority.
Yes, that's a big one. Preferred shareholders get paid before common shareholders. So if the company is paying out profits as dividends, the preferred holders have to get their full agreed-upon amount first. Only then can common stockholders get anything.
So it's like an extra layer of security for that income stream.
It is. It adds reliability.
And what about the price?
Yeah.
The book talks about stability, right? Less drama than regular stocks.
Generally, yes. They tend to be more stable. They don't usually have those wild swings you see with common stocks based on, some news headline or a tweet.
Because of the fixed dividend and that priority status.
That contributes, yeah. They often behave a bit more like bonds in terms of price movement, even though they trade on exchanges like stocks.
Interesting. Okay, so Marvin's philosophy?
Yeah.
He wasn't just buying any preferred security, was he? He focused on specific types of companies.
Right. He zeroed in on what the book calls companies the world can't function without.
The essentials.
Exactly.
Yeah.
Utilities, major banks, financial institutions, big infrastructure companies, energy providers, telecoms, the bedrock stuff.
So not the flashy tech startup that might be huge tomorrow or gone next week.
Precisely. He wasn't chasing that. He prioritized reliability, long-term value. The book quotes him saying he wasn't gambling, he wasn't chasing unicorns.
That was very sensible,
Yeah.
grounded.
It was about research, understanding the businesses, knowing what you own, building a portfolio with real intention for the long haul.
And for Tabin, the author, coming from Wall Street, this must have been quite a revelation.
You bet. The book describes his initial, maybe disbelief or at least surprise. Preferreds weren't typically pushed as the main strategy in his world.
Right. They're usually seen as maybe a small part of a portfolio, if at all.
Oh, often, yeah. But Tabin apparently came to really see the power in Marvin's focused approach. He even talks about his own experience receiving those consistent dividends.
What was the quote? No stress, no drama.
That's the one. No stress, no drama. Which, let's face it, sounds pretty appealing compared to constantly watching the market ticker.
It really does. And this is where it gets deeper, I think. It wasn't just about picking preferred securities. It was the whole mindset shift.
That's absolutely crucial. The book really emphasizes moving away from the chaos, the constant monitoring, the stress,
Towards what?
towards clarity, consistency, and basically peace of mind.
By focusing on solid companies.
Solid, stable businesses, good leadership, not too much debt, things you can actually understand and feel confident about rather than just reacting to market noise or hype.
And the result of that shift for the investor.
According to the book, it's greater confidence, less anxiety, because your portfolio is built on something, well, more reliable. It's working predictably in the background.
It does make you wonder then, if it's so effective and less stressful, why isn't everyone doing it? Why aren't preferreds talked about more?
That's a great point the book raises. They are accessible. They're not some secret handshake deal only for billionaires.
You can buy them through a normal brokerage account?
Usually, yes, they're out there. But the book suggests they get overlooked, maybe because so much financial education or advice pushes towards riskier growth-focused strategies. The potential for huge gains gets more attention than steady income.
So the appeal isn't just the money, the returns. The book argues it's something more fundamental.
Absolutely. It's about freedom. Freedom from constantly checking stocks, freedom from that market-induced stress.
It's about building a financial base that lets you actually, live your life with more calm.
Exactly. More peace of mind. Now, of course, no investment is zero risk. The book acknowledges that things like interest rate changes can affect preferreds or the company's own health matters.
Sure.
But the argument is that focusing on those essential, stable companies helps mitigate a lot of that risk compared to, say, speculative growth stocks.
Okay, so let's bring it all together. For you, listening, what's the core takeaway here? The essence of the Billionaire Secret as presented in the book.
Well, the central idea seems to be that real lasting wealth often comes from patience, discipline, a logical approach.
Not from wild bets?
Not usually, no. It's about focusing on reliable income-generating assets. And preferred securities from these core, stable companies are presented as a key example of that.
It's kind of contrarian, isn't it? In a world obsessed with growth stocks and quick wins.
Very much so. This is steady, less flashy. It's the opposite of trying to constantly beat the market.
So the big secret isn't really a secret formula or inside info. It's more about a different strategy, a different mindset, stability, consistent income.
That's the picture the book paints. And it suggests this approach offers a real path for people to build wealth with potentially a lot less stress and more predictability.
Which sounds like a pretty good alternative to the roller coaster ride many investors feel they're on.
It could be, yeah. A different way to think about it.
This has been fascinating, really digging into the Billionaire Secret and this whole philosophy. It definitely gives you food for thought. Which leads to maybe a final question for you, the listener.
Yeah.
Considering everything we've just discussed about this approach, stability, income, less drama, what's one common belief you hold about investing that might be worth, reevaluating?
That's a powerful question to sit with. Maybe it's that idea that you have to take huge risks to get decent returns.
Or that you always need to be chasing the next big thing.
Exactly. Or that investing has to be stressful and complicated. This deep dive definitely challenges some of those assumptions.
It really does. We definitely encourage you, if this resonates, to maybe look into preferred securities a bit more. Explore the ideas in the Billionaire Secret.
It could be a starting point, a way to think about maybe shifting your own approach towards building a financial future with perhaps a bit more calm.
Because ultimately, understanding strategies like this, it can give you more clarity, right? More control.
And potentially, a more peaceful path towards your financial goals. And greater clarity and control, that's a pretty valuable outcome.
Couldn't agree more. Thanks for joining us on this deep dive.
Thank you.
Until next time, keep that curiosity going.